Welcome back to Market on Close. We got green across the board. U.S. stocks getting pumped up today. Finally, a nice bounce for bulls in the market who've been waiting for this. Scott Bauer is joining us, CEO of Prosper Trading Academy. Scott, we're scheduled to talk a little bit of currencies and maybe some commodities, but first I want to get your take on the equity market finally getting some strength. Do you believe it?
Did you say green across the board? What's that? Do I believe it? I mean, I believe the tape that I'm looking at it right now.
Sure. You want to buy it?
I definitely wouldn't buy into it. Absolutely not.
Okay,
absolutely
tell me why.
Not. So here's the thing. We all know, or we should know, that the seriousness, the spread of the virus is going to get worse, not only worldwide, but quite frankly here in the United States. We know that's going to happen, okay? But the psychology of the market, Oliver, is such that, you know, the panic that people see starts to ebb. It starts to ebb as news cycles and news stories, you know, get prolonged. And the more we see about this, the more people start to shrug things off. Now, that being said, the first time that we see the next big outbreak, and I can't believe today, because we've already seen, you know, more deaths, unfortunately, and more widespread contagion here.
Right.
But the next time that we see the airports being shut down, the train stations being shut down, and that is going to happen, in my opinion. I'm not trying to scare anybody away, but all of these things are going to happen in precaution. We're going to sell off again. So, you know, I think what I take out of this entire thing right now as a positive, not just our market move today, the thing I'm focusing in on most, and I wish I could believe it more than I do, is that if the cases in China are really going down day by day as they claim to be right now, if we can believe that, and that's a big, big if. But if we can believe that, what that tells me is this too will pass here, right? We'll get through the worst of it, but I don't think we're there yet. We're definitely not there yet.
I think it's a good point, Scott. We've been looking at the chart from the Johns Hopkins team where you do see the leveling out of the China cases. I want to talk some dollar here with you, though, because right now what you've gotten is the correlation still holding where the dollar is moving in the same direction as stocks. For a lot of folks, they think lower dollar, that's good for the S&P 500. As we've been discussing here, that hasn't really been the case with higher stocks and higher dollars. So at least it's holding with this new regime where they're moving in the same direction.
No, you're right. And you know, you look at the last, not only 6 weeks, but maybe the last 6 months at the correlation between equities, currencies, the bond market, and there has not been that correlation, that historical correlation that we've always kind of turned to and said, okay, if X happens, then Y is going to happen.
Yep.
And it's really confused traders, of economists, everyone out there. And now, you know, you're starting to see maybe a little bit of normalcy here, or normalcy based on what history has told us in this dollar move now.
Yeah. So dollar comes off. It's been kind of the result of this sort of safety trade and TINA trade where the rest of the world gets slow, but the U.S. stays strong. And sometimes we even cut rates to help, balance things out. And that's a great, cocktail for U.S. stocks. Scott, I wonder how this disrupts that at all now, because if the U.S., to your point, follows the same pattern as the rest of the world, you could have a scenario where if our transportation hubs and such get shut down in a couple weeks because this thing keeps spreading while China's trying to get back online, maybe there's a situation where suddenly, this virus kind of flips things on its head, right?
Yep, totally flip-flop it around. And when you look at the dollar and you look at rates here, why can the Fed jump in if they're going to and cut rates by 50 basis points? Because they can, because we're the only ones realistically that still have a positive, interest rate environment. So they can. However, when they do that, and I don't think it's if, but when they do that, that is then going to narrow that gap between U.S. rates, the dollar, and the rest of the world. So it kind of,
so dollar gets crushed if they
cut.
cut.
Those bullets. Totally. 100%.
Because that hasn't happened the last few times they cut. What you're saying is important here.
No, I definitely agree with you, because that gap then narrows. And like what you just said, and this could be the best thing in terms of defeating the virus, or at least seeing the cycle of the coronavirus. That could be the best thing, where you start to see currencies flip on their head like you just said.
Yeah. All right, Scott, I'm guessing if you don't want to buy the bounce in stocks, you don't want to buy in crude either, right? Before we let you go, thoughts on the move in the commodity and WTI today? 5.5%?
You know, I'd buy crude before I'd buy the equity market here.
Okay.
I don't want to buy either one, but I would buy crude ahead of it because I think that the fall in crude is less than the potential fall that we still have in the equity market.
Yeah, all right. Well, we're looking for cuts everywhere. We're looking for the Fed to cut for stocks and OPEC to cut for oil. Scott, really good conversation. Really like it. Good point on the dollar and the flip-flop potential here.
Thanks,
Appreciate
Oliver.
it. You got it, Mr. B. He's the CEO of Prosper Trading Academy.